RBI's digital currency plans. Why is the government introducing CBDCs, that is, central bank digital currency? What will be the risk in the transition to the next new monetary system? In the budget presented for 2022 to the year 23, Finance Minister has announced the introduction of India's central bank digital currency CBDC and that the digital rupee would give a big boost to their digital economy. She also indicated that the technologies such as blockchain would be used by the Reserve Bank of India to issue the currency starting from the year of 22 to 23. The RBI said that it would be soon begin work on phased implementation of the CBDC, that is, central bank digital currency. The question now arises, what is central bank digital currency? Our CBDC, that is central bank digital currency, is no different from the cash that we hold in our wallets, except that it exists in a digital form. The CBDC will be held in a digital wallet that is supervised by the central bank. In India, it will be the Reserve Bank of India that supervises the digital rupee, although it may delegate some power to the banks. However, it does seem probable that RBI will take the steps to encourage the use of digital currency over the physical cash. It should be noted that RBI's digital rupee will not be directly replace demand deposits held in the banks. Physical cash will continue to be used by the banks, and the people who wish to withdraw cash from the banks can still do it, but they can also opt to convert their bank deposits into a new digital rupee. Why are central banks issuing digital currencies? Central banks claim that there is an increased demand for the digital currencies which they wish to satisfy. They point to the rise of private digital currencies such as Bitcoin and also increasing use of digital payments. As an example of this secular trend, central bank digital currencies are promised as reliable, sovereign-backed alternative to private currencies which are volatile and unregulated. Critics, however, note that the demand for the private currency comes primarily from the people who have lost faith on fiat currency issued by the central bank. They argue that the governments across the world have been debasing their respective currencies by printing them in excessive amounts, thus forcing many to switch to private currencies. Supply is limited by design, so the mere digital version of national currency like the rupee or the US dollar is likely to affect the demand for private currencies, they believe. Central banks also believe that the cost of issuing digital currency is far lower than the cost of printing and distributing physical cash. The RBI can create and distribute the digital rupee at virtually zero cost since the creation and distribution of digital rupee will happen electronically. Another likely reason for introduction of digital cash may be to bring down the use of physical cash. Unlike physical cash, which is hard to trace, a digital currency is that monitored by the RBI can more easily tracked and controlled by the central bank. This feature of digital currency, however, has raised various concerns regarding their privacy and could slow down their adoption. In fact, it is worth noting that the need of the privacy has been one of the primary reasons behind the switch to private digital currencies. Is CBDC becoming more common across the world? CBDC means central bank digital currency. It is worth noting that several countries, including United States, those have been in European Union and China, have been working seriously towards issuing their own central bank digital currency, that is CBDC, in the recent years. In October 2020, the Bahamas launched the world's first CBDC. However, a few countries, including Finland and Denmark, have taken a step back and have said that they have cancelled their efforts to introduce their digital currency, according to the cbdctracker.org. In 2017 note, Denmark's central bank indicated that it was unclear what central bank digital currency would be able to contribute that is not already covered by current payment solutions. It also added that the potential benefits of introducing CBDC in Denmark were not assessed to match the considerable challenges that this introduction would present. So what are the risks in adopting digital currency issued by central banks? Many, including various central bankers, fear that the people may begin withdrawing money from their bank accounts as digital currency issued by the central bank become more popular. This concern was flagged by RBI Deputy Governor as well. So remember that many people currently use bank accounts to safely store their cash. When the digital asset, that is wallet, offered by the Reserve Bank of India serve the same purpose, people could very well begin converting their bank deposit into digital cash. One thing that could prevent any large flight of capital from bank account to digital currency is the fact that bank accounts, unlike digital currencies, offer interest on deposits. But in developed economies where interest rates are near zero or even negative, the risk of people rushing their money out of the bank accounts and into digital currencies is very real. This may note that an immediate concern for banks in India which still offer returns that are positive, at least in nominal terms, to their depositors. The withdrawal of bank deposits can also affect the amount of loans created by the banks. However, this could happen not simply because banks will have fewer cash deposits to lend to borrowers. Contrary to the popular belief, banks do not loan out any actual cash deposits. Instead, they use cash deposits as a base on which they create a pyramid of electronic loans far in excess of the cash deposits. So banks hold lower amounts of cash in their wallets than what their deposits and borrowers could demand from them anyway. The real reason banks will be able to create fewer loans is that when the customer convert their bank money into CBDCs, bank will be offered to surrender for at least some cash and will thus process an even smaller base on which to create the loans. Also, when bank customers convert their deposits into digital rupee, the Reserve Bank of India will have to take these liabilities from the books of the banks and onto its own balance sheet. So the question, what lies ahead? There's speculation already the central bank will cap the amount of money that an individual can hold in the form of CBDCs. This is to prevent the mass withdrawal of the deposits from the bank. Some even believe that some central banks, such as the European Central Bank, may impose a negative penalty in their digital currencies. This could be done to force the people to spend their digital currencies and to discourse the withdrawal of deposits from the bank that impose negative interest rates. Central banks may also have to inject fresh money into banks to ensure that the ability of the banks to create loan is not affected by depositors' rush to digital currencies. This is regarding RBI's digital currency plan and the government introduction of CBDC, that is central bank digital currency, and what are the risks in the transition of the new monetary system. This is the gist of RBI's digital currency plans.